One of the most popular and widely used features in crypto is futures trading. And for beginners, it might seem like futures trading sounds very complicated. And in this video, I'll show you how futures trading on BingX actually works and why so many traders are using futures trading every day, every hour, and every second. Before we start, I'd like to note that this is an educational video for sharing knowledge. This is not investment advice, and the crypto market always carries risks. So please do your own thorough research before making any trading decisions. Also, if you're trading on BingX and haven't received fee rebates or discounts yet, I'm supporting a BingX trading fee rebate program of up to 30%. If you haven't received a rebate, please message me directly. I'll guide you and check to provide further support. Alright, today I am going to talk in detail about the most popular trading method among professional traders and within the global crypto market, which is known as futures trading. For many people who might not yet know about futures trading, I will give you the briefest possible explanation of what it actually is. Essentially, futures trading means that you predict whether the market price of a specific coin will go up or go down in order to make a profit. For example, let us take Bitcoin as a primary example. If you predict that the price of Bitcoin will continue to rise further, you would click the long button. But if you think it will go down, perhaps right now it has already increased a lot and you predict it will drop soon, you would click short to make a profit. In the world of futures trading, especially on the BingX platform, there are a lot of different coins available for you to trade. There are a lot of different coins. When it comes to futures trading, there is a very powerful tool known as leverage. This concept is incredibly popular because it allows people to potentially earn significant profits in a very short amount of time. Of course, there are also substantial risks involved in this process, but you simply need to understand how to properly manage those risks and make the absolute best use of the leverage available to you. Currently, on the Binance platform, the available leverage ranges from 1 times all the way up to 150 times your initial investment. That means, for example, if you enter a position or place an order with a value of about $10, let's say you have $10 and you use 20 times the leverage, you will have $200 of buying power or even $2,000. Let me show you a clear demonstration of how this works. Here on the interface, there are several different margin modes to choose from, specifically the cross mode and the isolated mode. Cross mode means that you can open both long and short positions, and you will be using your entire account balance as your total margin. So if you have $1,000 in your account, when you place an order, you can utilize the full $1,000 as the margin for that specific coin. As for the isolated mode, each individual position is kept separate, meaning for every trade you make, you will use a specific portion of your funds. For example, if you place a specific order and put in about $20, and if that trade doesn't go exactly as planned and you lose, you'll only lose that initial $20. For beginners, you should definitely use this type of order because it's much safer for you. Here, these two options are clearly separated. These allow you to open positions in both directions at once, both long and short, so you can bet on the price going up or down. But with this separate mode, you can only open a position in one single direction, meaning you're predicting that the coin will only go up. Then you can only go long, just follow the long position. If you think the price will go down, you can only open a short position. You can't open both positions at the same time, both long and short, like you can above. Here, you can't open both. This is the isolated mode. So to briefly talk about the options here, this is the limit order, which means it's a limit order type. There are different options here. You can click here. There's the coin margin option, the USD margin option, and the volume in USD option. Here I'll provide a detailed explanation of the two types of margin or these two margin options. Usually if you're just starting out as a beginner, you'll use these two margin types more than this one. As for this one, you won't have much of a need for it yet. So let's say we set it to $10. For the 7 coin, let's use a smaller amount, about 100, to make it easier for you to use. 100 is easier to calculate, so $10, quantity 100, and the market order. Market order means this order will be executed immediately as soon as you place it. It will trigger the order right away at whatever the current price is. It will enter the order immediately with that $10. So if you use 100 times leverage, your total position situated at the vibrant local market in Bin Long. So your total volume will be exactly 1,000. That is 1,000 in volume or $1,000 in total volume, because it uses the 7 coin right here, which is actually a bit trickier than this other one. Why didn't it show up when I entered this earlier? Right over here, look closely, it actually does show up right here. 900, 950. Do you see that? This specific SD, this SD value is exactly 1,000. This particular one will deduct the platform fee and the service fee from the exchange. So that is exactly what is left over here. If you go by the total volume, meaning it already includes the leverage, then if you multiply this by 100 times over, the total amount you have to put in USD is about $10. This is the margin, that is the margin right there. So to get used to using it, at first you should use the specific modes, like however many dollars you have, that is exactly what you will put in. For example, if you have $10, you will put in $10 plus the leverage, so that is 1,000, which comes out to about 950. There will be a small platform fee, so it will end up looking like that. This is the main feature of BingX, and it is for the so-called professional mode. And right here is the margin using the coin itself. If you are a beginner, I think you should really look into this. And there is another feature of BingX specifically for even newer users, brand new people who do not know anything yet, then use this one. You should focus on this one and this one. These two features of BingX are for the futures mode, and here the interface is much easier to see and it is more user-friendly for beginners. Here we have limit orders and market orders. So what exactly is a limit order? For example, many traders will carefully calculate the specific resistance point of this coin. Let's say BTC drops down to around 69,700 US dollars. Then they will set a trigger order right here, a long order. When the price drops to this specific point, it will likely start to go back up. Usually they calculate these entries based on the resistance point. For instance, they think BTC will drop here and then bounce up, so they set a limit order at that level. So as for the market order, it will execute immediately, it will trigger right away, and you'll enter the position at the current BTC market price. This limit order, on the other hand, will only execute if the price drops down to or rises up to a certain level, depending on how people calculate it. This is the future section. You can check out the detailed guides provided by BingX. And here is a very special and useful feature, demo trading. If you're just entering the market for the first time, you should definitely use this feature. It's a pretty popular feature on the BingX platform, and a lot of new users come here and use it frequently. This feature is really reasonable because it gives you a certain amount of virtual money on the platform, and the chart will move exactly like the real feature with real values and a real market environment. You're trading in demo mode, experiencing it fully, but the main difference is the platform gives you virtual money to try out the trading features.
instead of using your own real money. You don't have to spend anything at all here. You're just experiencing the process. Whether you make a profit or a loss, it won't affect your real wallet at all. And that's a complete overview of the contract section on BingX.
That's basically how futures trading works. Also, there's something very important that most newcomers overlook, and that's the transaction fees. Every time you open or close a futures order, the exchange will charge a small fee. If you trade frequently, then these fees over time will add up to quite a large amount. However, there's one thing that experienced traders often use, and that's the transaction fee rebate program. This program will help you get back a portion of the transaction fees every time you execute an order. If you trade long-term, this amount of rebates will help you save a significant amount of costs. If you want to learn about the futures transaction fee rebate program for exchanges like BitJet, OKX, BingX, or Binance, and other major crypto exchanges, you can check the detailed information in the link I've provided in the video description below. If you want support and further guidance on how to register or receive futures transaction fee rebates from these major exchanges, even if you already have an account, please contact me directly and I will assist you.